Moving on to our special segment, Midcap Spotlight. Vahishta is focusing on a mid-cap stock, and it is Gokuldas Exports, which is one of the direct beneficiaries of a weaker rupee. Vahishta, tell us more.
Hi Sonal, thanks for that. Well, the rupee has breached the psychological mark of 80, and with this the textile sector could be a potential beneficiary because of the strengthening of US dollars. The dollar index, as we know, is already at its new highs. Spark Capital has initiated a coverage on Gokuldas Exports with a target price of 517 rupees. So Spark Capital says that revenues could rise by 43% in the next 2 years and double in the next 4 years on the back of a 480 crore capex outlay. The company's scale of operations are also expected to increase significantly, and hence the company is planned to become one of the largest garment exporters of India over the next 5 years. Now, some of the catalysts for the growth for the stock are India increasing its 3% share in global weave-in RMG trade on the back of the China Plus One strategy. Also, there is a PLI scheme on man-made fiber. There are probable trade agreements. Spark Capital has expected that EBITDA margins could rise from 10.3%, which was in FY22, to 14% in FY26. Now, we also know that the company derives 98% of its revenues from woven garments, such as outwear and casual wear. Also, the global woven apparel consumption is already picking up, which is led by the back-to-office pent-up demand, as we know. Gokuldas Exports derives 80% of its revenues from US, where the clothing retail sales are quite resilient at present. Additionally, Xinjiang ban has forced the large apparel exporters like Bangladesh, Vietnam, Cambodia to re-look at their supply chain, and hence Indian players like Gokuldas Exports could be one of the beneficiaries.
Thank you very much, Vahishta, for taking us through that.